What's going on, guys? This is Alex from the Stock Operator channel and coming at you with a market monitor slash general market update video. And what we're going to do is we're going to look at my market monitor forecast and where the market might go in the next few days to few weeks. And then also some internal breadth metrics, because I know a lot of people are talking about breadth, how there it could be a top and everything like that. So just give you guys a little bit of clarity on what I'm thinking and what the market could do going forward. If that's what you're into, stick around. All right, to start off, let's talk about the broader market and the market cycles and where we are in that cycle. We are currently market monitor red, day 7, and we've gone negative 3.5%. Now, an average red cycle lasts about 6.4 days and goes about negative 2.1%. And we are at a full distribution count because we are in a red cycle. Now, what does that look like on the chart? So this is the IWV index. This is what I use for my market monitor. And as you can see here, I draw these little lines that basically give us the percent move and the number of days per cycle. And as you can see here, we started this red cycle on this candle here, and we forecasted out that it would go down 2.1% in about 6 days. And this one was a little bit worse than a average cycles. Actually before today's action. Now today's is a nice green day, getting back towards that average cycle. But we had that forecast before, and that's why we like to use these forecasts. So with that, I kind of drew in this little block of buy the dip area, because essentially we thought that this cycle was worse, and whenever we do have a worse red cycle, you can go down about 7% to 9% in a bad cycle. And we hit this little block right here, and we're bouncing pretty nicely. So we like to see that. We like to have this kind of expectation whenever we're going into these cycles. So with that, let's talk about some of the breadth internals. I know normally in these videos I go over every single major market, but maybe we won't do that. We're going to just go over the market monitor and have this be a market monitor video. So with that, let's go over some internals. So the first indicator I want you guys to take a look at is this DD. This is the drawdown indicator for the IWV index. And as you can see here, it's basically just shows you what the average drawdown is, or what we can expect. Now, this entire year from April lows, we've never seen a 5% drawdown. And as you can see in 2024 and earlier, you see 5% drawdowns all the time. Like we had one here, two, 3, 4, 5, almost 5 drawdowns in 2024 and early 2025. So to have a 5% drawdown is pretty normal for any kind of market. And to see the sentiment online getting so bearish, perhaps it's because we didn't have so many drawdowns this year. But just starting off with that indicator. Now, this is another indicator I like to look at. This is the 20 bull slash bear indicator. Essentially, it tracks 20% moves either up or down in 5 days. And as you can see here, since October is when things really started getting going here. We had a lot of 20% moves to the downside, showing the underlying distribution under the market. And this entire year from April, we didn't see a lot of 20% moves. We saw 20% move to the upside, but not the downside. This next indicator is a long-term indicator. This is the LT Brepp. Essentially, it's the 200-day moving average of the advanced decline line. And you like to see this thing above 20, above 40 in bull markets. Now, we've had a nice bull market from the April lows, but the long-term breadth has stayed very, very low this entire time. That shows us the underlying kind of market that we're dealing with, where tech stocks, large cap tech, is keeping the market higher. And basically, there's a lot of things that are not doing so well, almost a recessionary environment underneath the surface. Now, this is one of my favorite indicators. This is the stage analysis indicator. So basically, I track stocks in uptrends, that green line, stocks in downtrends, that red line, stocks in sideways moves after uptrends, that yellow line, and stocks in sideways moves after downtrends, that orange line. And as you can see from basically September, we've seen stocks in uptrends steadily declining and stocks that are going sideways after an uptrend steadily rising. And throughout this entire year, we've had over 20% of the stocks in downtrends. And that's very rare for this type of rally that we've seen. And we haven't seen a lot of stocks in sideways after downtrends. So basically, things that are going down are continuing to go down. They're not getting any sort of a bid this entire year, which is very interesting. Now, let's take a little deeper dive into the uptrending stocks and the downtrending stocks to see if we can see anything underneath the surface. Okay, so this is inside stage two, and I've broken up stage two into three different categories: new uptrends, established uptrends, and old uptrends. Essentially, old uptrends are 6 months or greater, standard uptrends are within 6 months of becoming an uptrend, and new uptrends are essentially, the moving averages have not crossed yet and the stock is above both prices. But essentially, what we can see here is there's a lot of standard uptrends happening in this market. Now, we've had a deep pullback in this last pullback, but rallies typically don't end without long term uptrends getting above standard uptrends. Okay, it would be very rare for this rally to end with the uptrending stage two stocks like this. Okay, we typically need a little bit more time before a really bad downtrend starts. So that's an interesting thing to note inside of the uptrends. Now, taking a look inside of the downtrending stocks, the stocks in stage four, same kind of process: new, established, and then late uptrends. And what you've seen here from October is a pickup in new downtrends, this light red line. So that's something to keep in mind and keep watching because, whenever you see a pickup in new downtrends, that can signal some pain that could be coming. But we're seeing this bright red line. That's just established uptrends within 6 months. That's not really upticking. So we're going to keep watching that. I think this thing needs a little bit more time before it gets worse. Now, taking a look at the correlation index, this is a indicator of really bearish markets. Essentially, if the correlation index is above 20, that signals a bearish or volatile period where everything is moving together. Essentially, correlations of the top 50 stocks in the S&P 500 are close together, meaning it's very bearish market. Anything below 20 is actually a very bullish period. So whenever we get this number, right now it's above 20. If that number crosses below 20 again, that would be a very bullish situation for this market. Now, this is an indicator I created myself. This is the Tom DeMark buy sell indicator. Basically, I'm just tracking stocks that are in very established moves where the close is, above or below the close of 4 days ago, 9 days in a row. Essentially, you can see it, this green line, it's a nice buy the dip indicator when this thing gets, 600 to 1,000, and that's where we are right now. Now, it did do a double dip earlier this year before the April kind of crash here. So that's something to note. But anytime this thing gets to, 600, that's a nice buy the dip indicator, which is probably why the market is moving up right now. And also, the red one is a little harder because markets are harder to time on the upside, with overbought than oversold. Now, this is my short-term momentum indicator. Basically, it just tracks short-term moves and short-term momentum in the market. And I have a red one and a green one. And as you can see, the red one is moving down and the green one is moving up. And that's how we're getting these nice moves in the market. This does a really good job at timing short-term moves. So we should see a nice little rally here, going into this week. Or maybe, we go down for a couple days and have an orange cycle and then go to green again. That would be ideal. So the last thing I want to talk about in this video is what's going to happen next. Are we going to end this red cycle? When are we going to end this red cycle? And how or what to look for the red cycle to be over. Now, we see here that the market made a low on this red candle. Essentially, what we're going to look for, or actually, it was this candle right here. It actually made a lower intraday low than the previous candle. So we're going to count 4 days from this candle. And if we don't make a new low in the next 4 days, and because we're so far away from that, it's actually another indicator that we're about to rally soon. Because even if we correct down here, it's not it could take longer than 4 days, which would put us into an orange cycle, which gives us we're going to put ourselves on a springboard for a nice green follow through day rally from here. So what I could expect is this thing pulls back here because red cycles are still very volatile, right? But within 4 days, that would go to orange, and then orange would be a nice indicator to start adding more and more exposure to this market. So basically, we're looking for this thing to stay above this low in the next 4 days, and then we're looking for a nice green day, a 1% day, kind of like what we're having today, to get really long this market. Now, if we make a new low, that would be very bearish, but essentially we have a line in the sand now. And that's the beautiful thing about red cycles and trading these kind of dips, is because we know where the risk is going to increase and where we're wrong. And we know that if we're right, the market should move up a lot from that price. All right, and with that, that's all we're going to talk about today. Hey, if you guys liked the video, please hit that like button. It really helps out the channel and helps out the algo. And if you guys have a comment or you guys curious about anything I said, hey, leave it down below. I like to talk to you guys. This is really awesome. A lot of people have great suggestions for videos, and I'd like to take your guys' suggestions. So with that, I'll see you guys on the next video. Cheers.